Hey, what's going on, guys? Sean Mathis here, CEO and founder of the Agency Alliance. Welcome to the Life Insurance Sales Accelerator program. I'm really excited to have put this together. We've been working on it for quite a while, and we've just had a ton of requests from clients and subscribers to do a life insurance sales program. Since we released our life insurance, our Limitless Life Leads program, which focuses on generating life leads, we then had tons and tons of requests of folks who wanted us to help them with life insurance sales. So in this program, we're going to talk a little bit about sales strategies. We're going to talk about my approach. We're going to talk about some unique positioning statements and ways to transition into the life insurance conversation to help you convert more of your prospects into paying customers. So I want to share with you kind of my philosophy and my story before we get into it that will really help you be successful with this program and kind of help you rethink things and kind of put you in the right mindset before we get started into the program. So as a new agent, I was heavily incentivized and had a lot of push from corporate on life insurance as a big focus, and as it is for most major carriers. If you're a captive agent, you're not going on incentive trips. Most of your bonuses are tied to life insurance, and retention is a huge piece of life insurance. A huge piece of the retention puzzle. So it's very important. We all know that, and it's also the most difficult policy for most agents to sell. Sometimes agents will have a life insurance specialist in their office, but for the most part, by and large, most agents are multi-lining their PNC, multi-lining their life insurance with PNC policies. And for me, I really struggled as a new agent with life insurance until I kind of changed the way that I thought about life insurance and changed my approach. So I think most people struggle with understanding how to position life insurance effectively. The millennials are the biggest consumer group in the country right now. Back when I was selling insurance, 8-10 years ago, the big push was targeting baby boomers, and that's where everybody was looking to target their books for their customers. And a lot of people are still doing that, but I want to focus on millennials, and the reason is because, number one, they're the largest segment of consumers in America. They're the most educated, the most savvy, and for long-term growth, we're going to have to position into the younger demographics, which is why we teach social media and internet presence and getting used to technology and leveraging technology to be relevant to these younger consumer groups. Your millennials are now starting their careers, they're starting families, they're purchasing homes. So all of the life events around purchasing life insurance, the significant life-changing events, are happening for millennials right now. So it's really important that we shift our focus from the retirees and the baby boomers to the millennials to get to have really big results. Everybody's after that small sliver of consumer groups that is the baby boomers, and I'll suggest to you that if you'll shift your focus to the millennials, you're going to see a huge opportunity there, and it's going to be a very successful time in your agency if you will shift your focus to the millennials. So in order to do that, you have to understand the millennials. You have to understand how to appeal to that segment. You have to be relevant to them, communicate to them differently than you would do your baby boomers. You have to understand what they're going through, what type of lifestyle they have. It's very important to be successful with any sales career, with any marketing venture, to understand your customers at the deepest levels. And one of the things that really helped me in selling was to position myself, number one, as a consumer advocate. I wanted to help my clients be better consumers. I didn't want to help them as a life insurance salesman. I wanted to help educate them on how they can be better consumers. So one of the things that I've always done is looked at myself as somebody who will educate the customers. A lot of people approach life insurance sales from an authoritative position, and one that is that says, I'm the professional, I'm here, you're here, allow me to tell you what's best for you. which is selling. That's selling. I don't believe that millennials are responsive to being sold. Millennials are too educated. They have too much information that's easily accessible to them. They don't want somebody telling them what's best for them. You're going to have a long road ahead of you if you position yourself up here, talk to your prospect that's a millennial down here, and tell them what's best for them. What they want to do is they want to be fed information. They want to be given the right information, enough information so that they can make a better decision. So your goal shouldn't be to sell them the type of policy you think is best for them. What your goal needs to be, and the position that I always took, is to educate your consumer and give them the respect that and understanding that they can make the best decision for their family with the right information. So all you have to do is give the right information, and the sale will be made. They'll buy. People love to buy. They don't like to be sold. So you can help them buy and help them make the decision by giving them the right information. So one of the approaches that I take in all types of sales, but especially in life insurance sales, is being able to be relevant with statistics. Again, we're going to dive deep into understanding first the demographic, because how do you position a product or service to somebody when you don't know what their problem is? Life insurance is a solutions-based product. It's not a something that's going to give them daily value from utility and being able to use it on a daily basis. It's a solution to a problem that the customer has to see is there. You can't tell them they have the problem. You have to help them see it for themselves and let them tell you what the problem is. So let's take a look at this. All right, so it's first good to understand the marketplace as a whole. So generally speaking, most people people are more likely to buy life insurance in 2016 than in any other year previously, which hosts a positive outlook for us, right? So, we want you to know and understand that it is a good time to be a life insurance salesperson. It is a good time to be having the sales conversations to talk about life insurance, because millennials specifically are more likely to recommend buying life insurance than in any other year, largely because they are more educated about the subject than any other generation before them. Before the internet age came, the only way somebody was educated about life insurance was if they talked to a salesman. If a life insurance salesman didn't talk to them, they wouldn't know. They didn't have any way to go and research that. And people weren't just going to the library to look up life insurance information and read books on life insurance. So the baby boomers are far less educated about life insurance than your millennials. Millennials are born in a technology age, and we understand the importance of life insurance more so than any other generation before us. Last year, 55% of Americans would recommend life insurance to someone else, where this year, 66% would recommend buying life insurance. That's an 11% increase. This is obviously good news as a life insurance salesman, but life insurance has always had this stigma around it of people not really being interested in purchasing or interested in talking about it. So a lot of times as salesmen or salespeople, we would be, we wouldn't want to have the conversation and bring that conversation up because we would think that it's not really something they want to talk about. And I promise you, most of you are not hitting your bonuses or you're not hitting your life sales production because you're simply not having the conversations. The number one rule has always been and will always be, in order to be successful in life insurance, is that you ask on every single call. You cannot waver from that. I assure you, when you have it plastered on your desk and you have it on your phone, I had a little note on my phone receiver before I would go to reach to hang it up, and it had the question, did you talk about life insurance? Every single call, you have got to do it. Whatever you got to do to make that happen, you've got to ask. That is the first and foremost. I promise you, you will increase your production by 20% if you will just simply ask on every single call. So knowing that now 66% of people would recommend having the life insurance conversation with somebody, you can now, in confidence, know that you're not going to be stonewalled with somebody who's disinterested in life insurance most of the time. When considering younger demographics, exclusively as much as 77% would be happy to recommend life insurance to friends and family. 77% of millennials would be happy to recommend life insurance to friends and family. And all of us are accustomed to asking for P&C referrals. We ask our clients whenever we sell them a policy for recommendations to friends, families, coworkers with no problem. But very few insurance agents ever ask for life insurance referrals. Every time that you deliver a policy or you have a life insurance conversation, you need to be asking for referrals from that customer. Understand that 77% of millennials are happy to recommend life insurance to friends and family. And this super social millennial crowd is having a conversation about life insurance becoming easier, or do they truly understand the value in the product itself? Is the technology age finally breaching the young families who likely to need life insurance today than in any other age group? And the answer is yes to all of those, absolutely. Millennials are more happy to recommend it because they're more educated about it than previous generations. Because of technology and the internet and social media, this consumer group is far more educated, so they're okay having the conversation and feel confident in recommending friends and family. If you don't know much about a product or service, you're not going to refer it to a friend and family. It only makes sense. "86% of all of those surveys, of all of those who were surveyed," and again, this survey was surveyed 40,000 millennials, and it was done by a consumer group that was hired by the insurance industry. 86% of all those surveyed mentioned they would agree that most people would require some amount of life insurance coverage. 86% of people surveyed, millennials that were surveyed, agreed that most people require some amount of life insurance coverage. You know, you've got some of those, some of the old baby boomers who, you know, are debt-free and they, you know, kind of live on cash and they have no credit. They don't believe in being leveraged, and there's not much of a need for life insurance for those type of folks. With as indebted as millennials are, and the more educated they are, they realize that everybody has at least some required need for life insurance. There was no distinguished segment of the surveyed crowd who didn't in some way show an unapologetic understanding of the necessity of owning life insurance. Though you'd be surprised how many still don't carry it. Of course, while we know these numbers seem positive, actual buying patterns are the most true tell on whether or not consumers truly mean what they're saying, right? Maybe there's innovation like wearable technology, which is seriously allowing insurance companies to integrate themselves at the forefront of a consumer's interest. And this little part of the survey, there's actually life insurance companies. If you want to kind of talk a little bit about the future of life insurance, they actually have these wearable like watch wristbands, like kind of like a Fitbit type deal, that monitors the user's activity, their heart rate, calorie intake, and all of these different things, and it actually gives them a more precise rating for life insurance companies to understand their during kind of like their application period. They'll wear this Fitbit type monitor, and they're beta testing this, where it's actually giving insurance companies the ability to reduce premiums by as much as 40% for folks who go through that type of an underwriting, which has made consumers very confident in buying their policy and knowing that that they're not just paying an absorbent amount of money for insurance. A lot of times there's a stigma around life insurance being something that insurance companies are using just to make profit, and they're overpriced. Something important to know: 51% of consumers would still choose to meet with someone in person before making a purchase. This is good news for you guys. Based on previous studies, this is a relatively odd man out, as the purely online purchasing group was expected to surpass the face-to-face preference this year. So, you know, we would think that because we're in such a digital age with the millennial group, that they would be confident in buying life insurance purely online. And study indicates that still the majority of people, despite the technology and despite the convenience of purchasing online, would still prefer to talk to an agent in person before actually pulling the trigger. So, you know, sometimes we get discouraged by seeing, you know, some of the Colonial Life commercials where, you know, a 40-year-old male get a $500,000 policy for $21 a month or something like that, thinking that we're so much more expensive than competitors. It's just too tough to be competitive with life insurance. You know, there's still plenty of room for insurance companies to make it more seamless for consumers to make the purchase, and we're seeing that more and more in the industry with e-sign and making the policies much easier to deliver, and really cutting out some of the steps in the underwriting process. Companies are getting more and more innovative and being able to streamline that process. So, you know, making it convenient is still important, but at the end of the day, you got to have confidence and understanding and knowing that your customers still want to have that face-to-face with you. So, you know, you can get into product positioning over the phone and get into piquing the interest, but ultimately you still want to set the appointment to go and close that deal in person or have them come to your office. 66% of American consumers cited as being concerned with a comfortable retirement, which is the highest concern of all. The tight squeeze on pension plans over the last few years, losses in IRAs and 401ks, and other retirement reform takes precedence over life insurance, despite the direct relationship where a retirement plan could be compromised for a surviving spouse should an untimely death occur. This is important to know, and it's an important point to start understanding what's important to your customers. And with the downturn of 2008, 2009, understanding that a lot of these pension plans and 401ks took a major hit, and you know, understanding the importance of retirement and how it takes precedence for consumers over life insurance. So this gets into a little bit of helping you understand this will help you position the product to what's relevant. And we're going to talk a little bit more about this here later in the presentation, but making life insurance relevant is the most important thing that you can do. And there's 4 keys of being successful in sales, and the number 1 key is the number 2 priorities is bringing value and making the product relevant and the utility of the product. So how useful is it? How relevant is it to them? And a lot of times it's really tough for insurance agents to make the sale because they're not able to hone in on the utility of the product and making it seem as something that is relevant and is necessary and is used by the customer. A lot of times, you know, again, we talked a little bit about life insurance being one of those products that people don't get any utility out of on a day-to-day basis. So oftentimes it's not high on the priority list. They don't typically want to have that conversation, or they don't feel that there's an urgent need for it because the lack of utility or the lack of relevance it has to them in this moment. So the more you can understand their world, the more relevant you can position the solution to them. So the first concern for 66% of Americans is retirement. Tied for second, the next major worries for Americans are long-term care costs and long-term medical expenses. 58% of people said that this was a major concern for them. Long-term care costs and long-term medical expenses. Very important for you, those of you that sell long-term care policies, and understanding that medical expenses and the rising cost of health care, it's a major concern. So how can you position life insurance to serve as a solution to this very real problem to your customers? With a largely busted healthcare system, extreme hikes in costs in healthcare for all ages, life insurance just doesn't beg the attention as much as the others. But leave it up to the life insurance companies, once again, to attempt to instill themselves in the wake of technology and the financial future. So when you talk life insurance, your customers aren't hearing you because they're hearing retirement and medical expenses. That's what I need to talk about. So positioning life insurance as a component of retirement and as a security for healthcare expenses with some of the living benefits and cash value accumulations and some of the riders that you can tack on to life insurance, being able to do these things and uniquely position your product as services and solutions for these chief concerns is going to be a very different conversation than talking to somebody about a 20-year term for $15 a month. Even though, I hear people talking about, well, you insure your cell phone, but why don't you insure your life? Well, because you haven't made it relevant. Just because life insurance is cheap doesn't mean they're going to buy it. You have to be able to position the product as a solution, a relevant solution that's useful in your customer's life, and that comes through understanding their world. So understanding this data is very, very important, and then being able to have the in-depth conversation and needs analysis and asking the effective questions is going to help you be more successful as a life insurance agent. I firmly believe that sales are made through education and sales are made through effective question asking. I don't believe that you have to be some aggressive closer and be this relentless person that doesn't take no for an answer to be successful in sales. In fact, I think in today's economy, it's quite the opposite, I found quite the opposite to be true. You don't need to be this aggressive salesperson in order to be successful. You have to be able to understand your prospects at a very deep level, and you have to be able to ask very effective questions, and we're going to get more into that here in just a little bit. We're going to talk about the Socratic selling method. 40% of millennials showed some level of interest in life or long-term care combination policy, and 25% of all consumers said they would be interested in such insurance products. That's powerful, guys, 40%. Very few life insurance agents or insurance agents do very well at long-term care. About 9% of insurance agents on the P&C side for captive agents for your State Farms, Allstate, Liberty Mutual, Farmers, 9% of the agency force writes 85% of the long-term care premium for P&C companies. 9% make up the vast majority of all written premium, and it's simply because you don't understand your consumers, you're not having the conversations. But understand that 40% of millennials showed interest in some levels of long-term care and life insurance. And that's important because the millennial age is a fantastic age to get folks into long-term care policies at a very affordable price. When you wait till they're baby boomers, it gets very expensive and very hard to sell. So you'll ask any agent that's successful, you're going to be more successful the younger you can have those conversations. And the great thing is understanding the millennials are very interested in having these conversations. So let's look at a couple more statistics. Those with no life insurance think it's 3 times more expensive than it actually is. Those with no life insurance think it's 3 times more expensive than it actually is. Whether you're considering Preferred Plus or Standard by the life insurance company, chances are you are paying much less for a term policy than your cable bill, and that's so true. And through your cell phone bill as well. Instead of assuming it's too expensive, try it out for yourself. Take a second to run a term or life quote on yourself. You'll be pleasantly surprised. If you think you're young and healthy, locking in affordable permanent policy rates is possible as well. These are things that you got to share with your customer. Landing permanent policies with term policies is another great option for you, and it's a great way to start building up that strategy, long-term strategy for life insurance. So we're talking about relevance here and how to position products and start the conversations in a relevant, meaningful way to millennials. So understanding that they think it's 3 times more expensive, millennials think it's 3 times more expensive than it actually is, which is a lot of times why they're hesitant to have the conversation. So one of the ideas I want to share with you, jot this down, get a pencil, jot this down. A fantastic way to leverage technology and social media to get into the life insurance conversation is on your Facebook page, on your personal page. Put a post out and do an enter to win like a game, an interactive type game situation with life insurance. On your page, post something like this. Let's play a game as like the headline in all caps, and then say, $50 Visa Mastercard gift card giveaway. Let's play along, right? So you want to like let them know it's a game. Let's play $50 giveaway for those who participate. How much do you think a 20-year, $250,000, a 20-year term, $250,000 face value life insurance policy would cost for a 31-year-old male with a standard rating or with in good health and non-smoker? Right. So whatever scenario you want, if you want to target ladies, whatever, or target men, however you want to position that, but do like a 30, 31-year-old, 32-year-old male, $250,000, 20-year term policy, good health condition, doesn't smoke. How much do you think that is? The person who can guess the closest, the person who guesses the right amount or the closest first, will win the $50 Visa gift card. We had several of our agents do this, but one of the ones that happened most recently did this, and had 53 people guessed in the comments. 53 people guessed. Didn't cost them a dime to run this, by the way. It just cost them $50 for the card. 53 people guessed. And here's the strategy. As they're guessing, they're all entered, right? If you open up the conversation, you've opened up the door for conversation to be had. But folks that were guessing extremely high on the amount that it would cost, you know one thing, you know a couple things about them. You know, number one, that they don't have a policy, because if I'm a 30-year-old male and I think that an insurance policy, a $250,000 policy, costs $150 a month, then I obviously have no concept of how much life insurance is, most likely because I don't have a policy. So you can attack this from a couple different angles. You can reach out to everyone who made a guess in the comments. Reach out to them and thank them for entering in and letting them know you didn't make unfortunately you didn't guess the right amount. The right amount, I know you guessed it was $150. The correct amount is actually only $30 a month. So I would like to ask if you have life insurance. My guess is maybe that you don't have life insurance because you thought it was so expensive, or if you do, you might be paying too much based on how much you think life insurance costs. I'd like to have a conversation with you and talk to you about that, if that would be appropriate here in the next day or so. And reaching out to people that way, I mean, make it your own. You're going to have your own personality and your way in which you engage people. Make it your own, but use that as the door to have to strike up the conversation. So we had 53 entries. He got 10 quotes, and he sold 4 policies out of that deal. Crazy results. All it did was cost him a gift card. So it's a great way to build up your promotion or your pipeline there. Let's look at another statistic. Almost 1/3 of people aren't buying life insurance, or most of it, because they don't like thinking about death. And this is a statistic that we all know. Right? So you gotta, and this is again why we're talking about positioning life insurance in different ways. We talked about this a couple times here already today. But people don't like to think about death. And if you notice, a lot of times when the life insurance conversation comes up, we position it as, well, what would you do if something should happen to you, or are you protected in the event something might happen to you, or how a lot of people position it in that manner. And so we even position it as insurance agents as if death were not an imminent fact of life. Like a lot of times we'll talk about when you retire and if something happens to you. And our consumers, our prospects, our clients think this way too. They love to talk to you about when they retire, but they like to talk to you about if they die. And the truth is you may or may not retire, but the fact of life is that we're all going to die at some point. 38% haven't bought life insurance or more of it because they're unsure of how much or what type to buy. And a lot of this comes from simply having the conversations. People just don't know what they don't know. And a lot of times they have policies from work or from somewhere else, so that tells you they already believe in life insurance. They know there's a need, but they haven't bought more because they haven't thought any more about it. Nobody's talked to them about it. So the key to being successful is having different types of conversations, making them think about life insurance in a different way. 1 in 3 women believe they don't have enough life insurance. 1 in 3 women believe they don't have enough life insurance. And here's the fact about women is that they have this biological nurturing nature about themselves, and they are far more likely to spend more money and be willing to invest more money, convert terms faster, and invest more premium dollars into a cash value of a whole life or universal or variable for their children's for their children's legacy. So when you sell, you're looking at converting policies. You're going to be it's going to be much easier for you to sell mothers and to sell them more of it. So understand that and work that nurturing, that biological need to nurture for their benefit, not for your benefit, for theirs. They just have to have somebody like the staff before who will talk to them about it. 40% insured husbands and wives have only group life insurance. 40%, almost half of working Americans only have group life insurance. Good thing is that they have life insurance already, so you don't have to sell the concept of life insurance to them. They already believe it. And the great thing about being an effective salesperson is helping customers see things a little bit differently. People will argue with a salesman all day long, but they cannot argue with themselves. So when you can have an intelligent conversation, a thought-provoking conversation, an educational conversation, one in which that brings the consumer to a heightened sense of awareness of their belief system, and that what you're offering, that the life insurance that you're offering is congruent and or is in alignment with their current moral compass, their current value system, they will be more likely to buy. What they don't like to do is go against their value system or do something that is not in alignment with what they're doing. But if you can show them that their actions and their investments and their decisions previously already say that they know they need life insurance, you're not telling them they need it. They already know they need it. You have to remind them of this fact because they don't want to think that you're selling them something. Mr. Prospect, I'm not here to sell you anything that you don't already have or that you don't already want or know that you need. You have it. What I'm offering to do is make sure that A, you have the right kind, you have the right policy in place, B, that you have enough of it, and C, that you have the options to make a better decision or to make the best decision for you and your family. I'm not here to make a decision for you at all. I just want to help give you the options so that you can make the best decision for you and your family. And the best decision for you may be to stay with what you have. I'm not suggesting that it's not. I'm just suggesting that if it's been 5 years since you started at that company, you probably haven't reviewed your policy in the last 5 years. Most people don't, and that's okay. But a lot's changed, and I'd like to just give you your options if you're okay with that. So one of the things when I would onboard a new client for PNC, I would always ask where they work. As part of the file, ask where your customers work. Number one, it's a great way to get referrals from them at their employers with their employer group. If you're in one of our other programs and you're running ad campaigns and you got customers at a certain employer group, why wouldn't you run ads to that employer group? Right? Ask for coworker referrals. But I would always ask, how long have you worked there? That's awesome. While you're having the conversation, and just for our records, where do you work? We want to make, I would always say, for our records, and to make sure that some employer groups and some industries, we have certain discounts for folks. Where do you work? Oh, I work at Boeing. Oh, awesome. When did you start at Boeing? Get a year, get a time frame. 5 years ago, 10 years ago, 1982. Oh, great, that's awesome. Put that note down. And then as you transition to life insurance, and you're getting into that conversation, you're in that needs analysis, bring that back up, and now you can say, it's if you find that they don't have life insurance anywhere other than at Boeing, you can say, a lot of times folks with the group policies, they sign up for them when they start. You might have started 10 years ago. Most of the time, they're not sending out group life insurance statements. It's just kind of one of those things that you have, and you really don't review it past the time that you purchased it. And a lot has changed, Mr. Prospect, in the last 10 years with life insurance. I'd like to just give you the options that are available to you so that you know what's going on with the industry. That way you can make the best decision for you and your family. And the best decision, Mr. Prospect, may be to just hang on to that Boeing policy. But we really don't know that until we see all the options that are available for you. Are you okay with me sharing some options with you? Sharing some options. I love that because it's very non-threatening and it gives you the permission. Everybody wants to know what their options are. Nobody likes to be forced to do something. Everybody loves to buy. They love to make their own decisions. And by you inviting them to share the options, gives them a sense of control. Subconsciously, they don't know consciously, but subconsciously, they all of a sudden feel a sense of control, and everybody loves to have a little bit of control. So let's look at how to position life insurance creatively. Mortgage protection. This is one of my favorite positions, unique ways of positioning. So to really get into depth and get really good with positioning life insurance, again, is all about understanding what's relevant to consumers today, what's relevant to your prospect. How can we make this useful? And how can we talk about life insurance without talking about life insurance? Because we know earlier on that the statistics show that most people don't like talking about life insurance because it involves talking about death, and they don't like to do that. So why would we force our prospects and customers to have a conversation that they don't want to have? Right? Like that's not a good idea. Let's talk to our prospects and customers about things they want to talk about. Mortgage protection. Let's look at the stats before we get into the position. The financial and emotional state of homeowners facing foreclosure. This is very important for mortgage insurance. Homeowners fail to contact their lender because they're embarrassed, they don't believe their lender can help, and or it would cause them to lose their home more quickly. Many homeowners already are at the financial edge. 43% of American households spend more than they earn each year. Let me say that again. 43% of American households spend more than they earn each year. This is important, especially when you're talking about life insurance. You have to know these facts. You have to know your customers at a very, very deep level. 52% of employees live paycheck to paycheck. 52% of employees live paycheck to paycheck, friends. Nearly 42% of all American households do not have enough in liquid financial assets to support themselves for at least 3 months. Guys, these are scary, startling statistics, and I know that you may have heard these before, maybe not. These are all they're all done by a study done by Bankrate.com, very recent data. It's important to know these, and the more that you can understand these facts, the more you can understand the world of your customer and make life insurance more relevant and serve your products and services as a solution to these very real problems that are facing your customers today. Most people aren't just going to come into your office and tell you, hey man, we're paycheck to paycheck. By the way, my name is Sean, nice to meet you, right? Most people aren't going to tell you, hey, we don't have enough in savings to last. Should I lose my job? Right? They're just not going to be forthcoming with this. But we're telling you now, this is the state of the vast majority of your clients today. 46% of American households have less than $5,000 in liquid assets. Nearly half of all of your customers have less than $5,000 in liquid assets. Folks, that's a problem. That's a big problem. Let's look at the turning point that put homeowners over the edge into foreclosure. These are the four main reasons that people are pushed into foreclosure. This is why it's important to talk about mortgage protection. 32% of homeowners are pushed into foreclosure because of they experience a job loss or a loss of income. Nearly 1/3 of all foreclosures happen because of a job loss or a loss of income. 25% because of a health crisis. 1 in 4 lose their home because of a health crisis. 52% of people in foreclosure have already missed 2 payments. 38% of American families have no savings, no available credit, have no savings, no available credit, and their extended families have very limited resources. This is why it's important for you to be able to put your clients in a position of helping themselves, because they can't rely on their family and friends to bail them out should they find themselves in a health crisis, should they find themselves with a job loss or loss of income. We have to empower them to be able to keep their home in an economic downturn or an economic crisis within their household. That happens through life insurance. So these are very real stats, and one of the things that I like to do is to talk about mortgage insurance. And so what we can do, and I've got some scripts in the script section of this program that you can use to have these conversations. But whenever you're dealing with somebody where a mortgagee clause is required and you're putting that into the homeowner statement, or somebody's in the process of purchasing a home, or they're in the process of a refinance, that's when you can use this. Most people have mortgages, so you can almost use this on every time. Anytime you change a homeowner, you're going to see a homeowner's policy. You're going to ask them for their declarations page, see that mortgagee clause, and let them know I need to update the lender on the home to make sure that they know that you have home insurance, so they don't put force-placed expensive insurance on the property. The mortgagee clause I see here is Wells Fargo. Is that still the case? Or if you have somebody who's purchasing a home, congratulations on the new home. We're going to definitely make sure that we let the lender know that you do have a policy in place that'll protect the home. Every lender is going to require this. And if somebody is in the process of a refinance, same type of deal, we're going to make sure that we let the lender know and make sure I have the mortgagee clause correct so we can notify them that you do have the home insured. Now, something that's important to understand is that if somebody does not have enough 20% equity in the home, they must carry private mortgage insurance. And I'm going to put some notes here to help educate you on private mortgage insurance. It's very important for you to understand this. You need to do some research, but I'm going to give you some key points, but it's important that you understand this so you can talk about this and position life insurance as mortgage protection. And it's going to be different than the mortgage protection that you're used to talking about and the way you used to position it. Right? You're going to notice that my way is just a little bit different, and that's the key to success here, is thinking and having different conversations and getting your prospects to think about mortgage insurance differently. So if they don't have 20% equity, they're going to have what's called private mortgage insurance. Private mortgage insurance is an insurance policy that the bank buys from an underwriter, from an insurance company, to insure the difference of loan to value between the down payment amount and that 80% LTV position. So, for instance, if somebody comes in and puts 5% down, the bank wants a 80% loan to value. And if you can't come into the loan with a 20% equity position, and a homeowner purchases a loan from a bank and doesn't have that 20% equity on the front side, they're forced to purchase a mortgage insurance policy, which the bank will purchase from the insurance company to insure the difference there. So to insure that 20%. And the bank is the owner of the insurance policy, although the borrower has to buy. So the borrower pays the premium for the bank's insurance policy, to ensure that 20% deficit of equity in that loan to value that they're looking for. Because they found, study after study has shown that borrowers that come in with less than 20% equity are significantly higher risk to default on the loan, and the bank is significantly they're in a significantly higher risk position of not being able to get out from under that asset without losing money. So the reason they like that 20% loan equity stake is so that if you default on the loan, they can then liquidate the property quickly and not lose money. They can sell it under market value and still get out of there cheap. And that's why you see foreclosures and you see short sales being sold far less under below market value, because the bank gets paid that money when they cash in that policy. So if you default, they can then take that policy and file a claim with the mortgage insurance company, the private mortgage insurance company, to say, hey, our borrower defaulted, we want to cash in that policy. So if you have a $100,000 house, you put $10,000 down, you're going to have to pay for an insurance policy to cover that other 10%. You default, they're going to cash in their insurance policy for the $10,000. They can then sell the home for $80,000. You put $10,000 down, they got paid back the other $10,000 from the policy, and now they can sell the home for 80 cents on the dollar. That's how that whole thing works. So you're going to it's a good idea to ask them if they have PMI with their loan, if they purchased private mortgage insurance. They may or may not know. Sometimes they have that conversation with the bank. Sometimes the bank slides it in there without really telling them about it. Tells them they avoid it, and really they just hike the rates in order to pay for it. But they're required to have it if they didn't put 20% down. So finding out what type of loan they have, and if they put 20% down, and if they didn't, they have private mortgage insurance. So at this point, now you can have the conversation. You can explain to them how private mortgage insurance works, and you can say, all right, I'm not sure if the bank explained to you what private mortgage insurance is, but sometimes it can be a little bit misleading in terms of how they named it. I don't like that they named it private mortgage insurance, but it makes you think that the mortgage isn't true. But that couldn't be further from the truth, Mr. Customer. In fact, here's how private mortgage insurance works, and explain to them how it works, and let them know that what you've done is you've purchased a policy for the bank to ensure the deficit of equity that you didn't come into the loan with, right? So it doesn't insure the mortgage. It insures the bank's risk against your default, but you're still on the hook for the entire mortgage. All right, so you've already bought the policy for the 20% loan to value to cover that part, but the 80% is still up to you to insure. And the PMI policy nor your homeowner's insurance covers that. What we have to put in place to cover that is a mortgage protection plan or life insurance. But what we have is a mortgage protection plan that will cover that. And you can cover that with a 20 or 30-year term policy. We also have a couple of other options. So what I would do is get your customer into that conversation, and what you let them know is, okay, I just need to talk to you briefly about private mortgage insurance. Here's how that works. What you've done is you've purchased a policy. In the example that we have in the notes, a $250,000 house, somebody that puts 10% down, that policy, that private mortgage insurance is going to cost $110 a month. And there's calculators online where you can find out how much it is, but they're going to have the documentation. They're going to know how much PMI they're paying. So what you do is explain to them that the bank has sold you the policy. You're paying for the bank's policy to cover the 20%, but that doesn't cover the other 80% of the mortgage. You're still on the hook for the rest of that mortgage. Should you default, or should you guys have a loss of income, and for some reason you're not able to pay that 80%, like you start defaulting. What I like to do is take a moment to show you your options on how you can cover the other 80% of that mortgage. The great news is it's going to be a fraction of the cost of that policy that you're paying for through the bank. And I know it doesn't make a whole lot of sense as to why you would pay 3 to 4 times more for a policy to only cover 20% of the loan when I'm going to cover the other 80% for 20 cents on the dollar that they're charging you. But that's good news for you. The even better news is that this policy covers you and your family, and you own it, and it's not going to the bank. If you default on the loan and they cash in the private mortgage insurance policy, that money goes to the bank. That money doesn't even go to you. This way, the money goes to you. So if there is anything left over, you're able to take that for living expenses for your family. So see, it's just a different way of positioning the policy, having a different conversation, and it really gets their attention, and you have them focused in on the policy and thinking about things differently. If you just talk to them about life insurance or a 20-year term, you're not going to get quite as far with that conversation, depending on their mindset around life insurance. So they may not have a mindset that's in alignment with purchasing life insurance. And rather than trying to sell them on the idea of life insurance and then sell them the policy, you can show them how they already have the mindset of mortgage insurance. They've already purchased a policy. You're just trying to help give them the options to protect the rest of it. It doesn't make sense for a customer to want to insure 20% of the mortgage and not the other 80%. So subconsciously, people find themselves in a conundrum if they're already doing something to then act completely against that, and that in which the direction they've already gone. So if somebody has already admittedly paid for an insurance policy to cover 20% of the mortgage, subconsciously they find themselves in a conundrum to then tell you that they don't believe in purchasing a policy to cover the other 80%. Now, why would somebody agree to pay for 20% and cover 20% of the mortgage, but not the other 80%? Doesn't happen. Again, it starts to see, hey, I'm not trying to get you to purchase anything else. I'm trying to help you finish the transaction in which you've already started, which was covering the mortgage. You've already indicated that's important to you. You just hadn't finished the job because the bank doesn't do that for you. So let's look at salary insurance. Salary insurance is a great way to position life insurance. So roughly 75% of Americans are living paycheck to paycheck with little to no emergency savings, according to a survey released by Bankrate.com. Fewer than 1 in 4 Americans have enough money in savings to cover at least 6 months of expenses, which is enough to help cushion the blow of a job loss or medical emergency. And meanwhile, 50% of surveyed have less than a 3-month cushion, and 27% have no savings at all. The other quote had 38% have no, I think it was 32%, but you got a 5% variation here. Fact is, nearly 1 in 3 people have no savings at all. So again, if they don't, traditionally we know 85% of people don't like talking about life insurance. Perhaps you want to have a conversation about salary insurance, right? Instead of talking about income replacement, they've been conditioned to know what you're doing when you're talking about income replacement. So if you start talking income replacement, you might get some feedback, some pushback of people saying, "Oh, wait, I know where you're going with this. You're talking life insurance. I don't want to talk life insurance." So knowing all of these stats that we've already given you, knowing that people are paycheck to paycheck, knowing that people have no savings, knowing the importance of their salary to them because they don't have a cushion, you can then use this. You can use this as leverage to get into the conversation about life insurance. So what you can do to get into this is when you're having the conversation on the PNC side, you're asking where they work. You're making sure that you have that you know where they work, how long they've been there. Ask where their wife or husband works, their spouse works. And most people that are dual income are dual income by necessity. They don't work because they have nothing better to do. Right? They don't work for fun. They need both of those incomes. So should they lose one of those incomes, they're going to find themselves in a world of hurt. We know that one of the top 2 reasons that people find themselves in foreclosure is by loss of income or job loss. What happens when somebody dies? They lose their income, right? certainly for single income families, the income is all that more important because it's the only one they have. So when you talk about, when you're asking them and you're in that conversation about work, where they work, how long they've been there, where the spouse works, say, awesome, I know somebody that works there. I've always wanted to know more about the aerospace industry, going back to the Boeing, whatever that, however you're building your rapport, having that conversation, say, I know that it's a great way to find out about life insurance. I know that a lot of companies offer life and health insurance. Do you have a policy through your employer for life and health insurance? We just like to have all of your policies down so that should something terrible happen, or your spouse or next of kin is looking for where your policies are, it's always good to just give them my card and I'll have documentation of where everything's held. Do you have your life insurance and health insurance through your employer? Yes, I have both. Great. Do you have the salary insurance as well? Do they offer salary insurance? Health insurance. Oh, no. Oh, okay. Right now we're going to finish up your home and auto, get all that taken care of. I'll get some more information on your life and health policy so I know who to contact there. Just jot those down for your file. And would you mind me sharing some options for you on the salary insurance? Most people, they work because they have to, right? They don't just work because it's a hobby. Most people's income is very important to them. If they lose that income, family will be in a really bad state. Would you like to see the options for being able to insure your salary? Yeah, and then breeze right past that and keep going back in the conversation. But at that point, you just want to gain the acknowledgement and the agreement to have the conversation about salary insurance. And when you wrap all that up, that's when you're getting to start talking about their salary, how much they make, and say, Mr. Prospect, in order to talk about your salary and being able to ensure that, I'm going to have to ask personal financial questions. It stays between you and I, and is that okay with you? Say, sure. Okay, so how much do you earn, and how much does your wife earn? Is that before taxes, after taxes, right? And how much of that is money that you guys are able to save on a monthly basis? How much do you guys put in savings out of that? Because what we want to know is how much of it do you actually need? How much of your salary do you need? Like, do you spend all of it, or are you spending about half of it? Are you spending 25% of it? Versus how much are you saving? Some people, they need their whole paycheck. All of it that comes in goes to bills, and that's okay. But I just have to know how much of it that you need, so I know how much of this, how much this policy would cost, and to look at the different options. And they're going to tell you, well, I need all of it. I can't afford to not have any of it. Okay, great. Let's say that you experienced a job loss, or you had a major health crisis, or something happened where you lost your salary. How long could you guys survive with the nest egg that you have in place? How much savings do you have in order to pay your bills until that loss of income would become problematic? Get an idea of what their current assets are. Then you can get into talking about the life insurance policy. But the thing is you caught their attention, you've made them think about it differently, right? You've opened their mind, and for that brief moment during that conversation, they're thinking about salary insurance. Now, sir, you can call it salary insurance, you can call it life insurance, but here's how it works. It doesn't matter what you call it. Here's the purpose, and here's how it's useful, and here's what we're doing with it. And now it doesn't matter what their belief was about life insurance on the front side. It doesn't matter how they feel about death. What they care about is protecting that salary, and that's what we're talking about, Mr. Prospect. We're talking about protecting your salary. There's a few different ways to do it. We can do it with a permanent policy. We can do it with a variable policy. We can do it with a term policy. Many different ways that we can ensure the salary. We can add riders for protecting you against health ailments and for different living benefits. We can use that as a tax shelter. Here's the options of how we can protect that salary, Mr. Prospect. And all of a sudden, it doesn't matter what the title is that you called it or what the policy name was. What matters is how it's used. That's how you're going to sell a lot more life insurance. You're going to sell much bigger premium cases. You're going to have far more conversations. You're going to have much more in-depth conversations. and you are going to increase your life insurance sales significantly using these strategies. So I'd like you to rewatch this, play it in your car on your way to work, put it in front of your team, share it with a friend, coworker, colleague, because I promise you these strategies will help you immensely.